Hi, everybody. This is the investing teacher, high school science teacher, teaching others how to invest. In this video, I'm going to do another mini challenge for my 2% a month challenge that I did based on getting 2% a month in premiums from starting cash secured puts or covered calls on relatively high implied volatility stocks. Anyway, in the past 2 weeks, I made a pretty large gain in SNDL, so now growers, and I'm going to do a separate challenge with just the profits that I made. I made about $850 in profits in 2 weeks. So let's see what we're going to do. I think it's going to be an interesting experiment to see how you could use premiums to acquire additional shares and build up the premiums over time. Like, subscribe, all that good stuff helps out the channel, and let's get right to it. All right, everybody, in this particular challenge, I'm going to be very robotic about it. Whatever I wrote in my bullet points is what I'm going to do, and I'm just curious to see what will happen in terms of the premiums over time. I don't know what's going to happen with the stock. It could easily tumble down to 50 cents. It could skyrocket to $4. And this is all profits that I'm doing. So if it doesn't work out, it doesn't work out. No big deal. I'm not going to be using any additional funds from whatever I made in the profits. So let's see what we're going to actually do. Okay, so here's my SNDL mini challenge. I made about $850 in profits in about 2 weeks. It was a very good position that I made. I might have been able to do better on it, but can't complain, right? So I'm going to use $850 in profits to earn a consistent weekly premium. That means I'm going to be selling only weekly options. The goal, and this is what I'm going to start out with, is sell weekly cash secured puts, one strike out of the money. For example, the stock was about $2.06 as of February 12th. So we're going to go at 1.5 cash secured put. I'm going to do that every single week. Whatever the price is, I'm going to go down one. If it's at $1.60, I'm still going $1.50. Okay. If it's within like a penny or two, maybe I'll just go down another one. But if it's relatively close, we're going to try to get consistent weekly premiums off it. With the premiums that I have, I'm going to buy more shares of that particular stock. So as we'll see in the numbers, I might be able to get quite a few shares relatively quickly based on these low share prices. Once I own the 100 shares with this premium, assuming I never get assigned, then I'm going to go the other direction in the wheel and sell covered calls. And I'm going to still do, again, one strike over. Rinse, repeat until hopefully I have many, many shares. So I'm going to start on the cash secured put side. Whenever they're assigned, we're going to sell one strike up. For example, if the stock's about 145, I'm going to go up to, let's say, covered call at 2. Not cash secured put here, because I'm going the other direction in the wheel. I'm not going to do any other strategies. I'm not going to buy to close at 0.05 the day before. I'm not going to roll up and out like I did previously to earn my profits. Nothing. I'm going to be very robotic and just curious to see. It's actually more of an experiment than anything else. I'd like to know your thoughts and questions as I go through some of the current premiums and what might happen in the initial setup. Okay, so I'm doing this video on 2/13. The next trading day will be on Tuesday, 2/16. So it's going to be a short week. Strike price for the cash secured put side at 1.5. The bid was 0.10. The ask was 0.15. I'm going to put my bid at 0.10 at the open. Obviously, the stock might completely shoot to the moon or tumble like weeds. And we'll see what happens in terms of where I get assigned in terms of the price of it. So 10, let's say this example, I get 10. Divide by 1.5. Again, it's 6.6, very devilish percent return for that week, which is a very good percent. And if you look at the deltas of it, the delta is actually 0.09, which I think is completely bonkers because the stock could go either direction very dramatically. Who knows what's going to happen in the end? Again, yield is 6.67 in a week or 400% a year. So if the stock ends up having a really high implied volatility the whole year, and the stock just happens to not move much, that'll be a 400% return in a year. I'll take that every day and tomorrow. So again, just curious what's going to happen here. Maybe it'll go up, maybe it'll go down. So again, curious about your thoughts, questions, if you think that there might be a better way to do it. Again, I'm being very robotic about it. I could do some advanced strategies behind to close and rolling and all that. I just simply want to see how much premium could I get on weekly expirations. Pretty close to the money, but I'll be one strike lower than that. Again, the investing teacher, high school science teacher, teaching others how to invest. Please like, subscribe, all that good stuff that everyone says. It does help out the channel. And I'll see you guys next time.